back to another episode of Learning with Bell. Life behind tints. Life behind tints? Nah, we're not life behind tints. If you're locked in right now, then that means you guys are here. You're learning with Bell. Now, in today's video, I'm going to be sharing with you guys just exactly how my session candle strategy works. My LWV session candle strategy. Now, this works wonders, guys. We can use this on any pair, whether it's GBP, USD, USD, JPY, gold, Bitcoin, you name it, it works on it. Okay, now what most people probably don't understand when it comes to trading is, trading is actually subjective to what you see and how you see it. So if you guys trade in different ways, then that's not necessarily a problem. Some of you trade support and resistance, some of you guys trade institutional concepts. Me, myself, I'm more of an institutional concepts trader, and that personally is for me what works best for me. So I don't want to take you guys away from trading the way you trade, but it's really important when trading to find a simple, clear and concise strategy that can help you guys put you in the best position to utilize trading smoothly. Trading is not about waking up each day and having a heart attack because you're in drawdown, and the next day you're ecstatic because you're in profit. Trading is about having a smooth trajectory, okay, like this, just like at work. For those. Damn, all that time I've been talking and the microphone was over there. Crazy, cover. That is what you call getting caught up. Damn. So sorry, guys. Alright. Let's start this again. Alright, guys. We'll start this again. So sorry. If you're tuned in and you're here, then you're locked in and learning with Vel. Now, in today's video, I'm going to be sharing with you guys exactly how I use my LWV strategy and the simplicity of what it does when it is correct. Now, it has a 70% success ratio. So the 70% success ratio just means that, there are going to be times where you have a losing trade. There are going to be times where your session candle isn't activated. There is going to be times where you take 5 to 10 of these trades and only 3 of them give you half of what you was anticipating. That is the name of the game. Unfortunately, nothing in this game is a guarantee. We don't know how far, how wide or how long a trade is going to stay profitable for. And we also don't know if trades are even going to come into our areas and match our criteria. When we can lower that expectation, we put ourselves in a prime position where we can understand when a trade is there, we need to be able to take it. Okay, now I'm just going to share this out into some of my communities first before I get into it too hard. Pause. Let me just share this around. For the first 5 minutes I was talking and the microphone wasn't even there. Okay, I'm streaming trades for those who want to see. Okay, so I currently sent out this trade here with gold. If we have a look in my community, so in the live trades channel here, you can see here I sent out this gold trade. Now this gold trade has hit TP12. We're currently waiting for TP3 to get hit. Now, if you've clicked onto this YouTube video based off of the thumbnail, then you'll understand, okay? What I'm going to teach you guys is a very simple yet effective strategy that can help you ascertain 5 figures trading Forex. Of course, discipline has to have a huge part in the fact of you being able to maintain a 5-figure earning rate, but at the same time, the skill set that I'm teaching you guys is the only thing that I can teach you. I can't teach you guys how to be patient, how to be disciplined. You have to go through your own trials and tribulations to be able to get to that stage where you understand the importance of being disciplined, right? I can't tell you to wake up at 5 a.m. and be there in your house to physically wake you up. You need to do that yourself. You need to take yourself, they say you can take a horse to the well, but you can't force him to drink. So what I'm going to be doing is I'm going to be sharing with you guys a simple yet effective strategy. Now, this strategy that I'm going to share with you guys, I've shared with a few of my students before in the past. It's called the session candle strategy, the LWV strategy. That's what we like to call it. And of course, that session candle strategy is actually what's been very effective for me. So I'm going to start off by going on to, let's say, something very simple like GBP USD. Okay. Now, I'm going to make this chart blank and I'm going to show you guys. This is going to be a bit of a test to show you if I know what I'm talking about or not. I'm going to go back 2, 3, 4, 5, 6. Okay. Here. Okay. And now that I've come back here, we're going to start just from here. Okay. What I should have done is told you guys to tell me a pair. In fact, we'll make it more interesting. Someone give me a pair to analyze. Give me any currency pair. The man, the myth, Mo Huncho. Assalamu alaikum, my bro. One of the top traders in here from Belgium. Grozzy, how are you, my bro? Hope you're blessed. Someone give me a pair. Someone give me a pair. No one's going to give me a pair? All right, let me not wait. Let me not slow down the class here. Okay, cool. Let's stick with GBP USD, right? Now, just by looking at this chart, I can understand for free that whenever I see price moving, price is fractal, okay? So what that means, he says GBP JPY, okay? I hate GBP JPY, but just for you, my bro, I'm gonna do it, okay? GBP JPY, FXCM, all right, cool. Now, okay, cool. So look, here we are up here. Let's see where we are. Okay, so we've been on a bullish run, sorry, excuse me. Cool. So price is fractal, okay? Now, what this means, guys, is whenever we see price pushing across, whenever we see price moving up or down and turning around in specific areas, there is a reason for this. Price will never go to where it has never been before. And if it does go to somewhere it's never been before, for instance, an all-time high or an all-time low, then it will create a structure in that area, which is, of course, how the markets formulate and move accordingly. So GBP JPY, the London session starts at what time? 8 a.m., right? So what I'm going to do here is just show you guys very briefly the London session candle. Where's 8 a.m.? Can we see 8 a.m.? Now within 10 candles, we're going to find ourselves 10, let's call it 6. Within 6 candles, we're going to find how profitable the strategy can be for us. Okay, here it is here. All right, I'll come back to the chat box in a second. Let me just mark this out quickly before we get into the beef, into the steak of Bitcoin and gold. Cool. So we've got one session candle here. 1, 2, 3 to the 4. Snoop Doggy Dogg and Warren G at your door. 7, 8. All right, cool. One more here. Remember, guys, I told you I'm going to mark out 6 of these candles, right? And within 6 of these candles, we're going to find a profitable trade, okay? Now, I'm not marking out, notice I'm not marking out the Tokyo session. I'm only marking out the London session right now. We've got 1, 2, 3 to the 4. Snoop Doggy Dogg and Warren G at your door. All right, what's this one here? This is the 4th one. All right, where's the 5th one here? This big candle? No, it's 8. Okay, that's 9, sorry. All right, cool. And then last but not least, there'll probably be one around here. Where is it? 8 o'clock. Here? Perfect. Bada bing, bada boom. Terry Tibbs, talk to me. Talk to me, darling. All right, cool. So look, what am I talking about? Well, this is what I'm talking about, okay? I'm going to wait for price to move up or down 30 pips or more. Now, usually on average, you should find the range of what each pair is that you're trading. So you can see here on average, you know, a range, a GJ range. A GJ range is going to be, let's see. Let's just mark out some zones where it starts to consolidate. We can see it's 100 pips. 100 pips is sideways movements, right? 70 pips here. If we check this range here, it might be bigger than 100. But we can see here that if price moves 100 pips, okay, it may not go anywhere. It can move up 100 and down within a 50 pip range. That looks a bit more realistic. We'll try one more over here. We'll see this range. It's probably about 100. No, 56. Okay. I don't trade GJ at all, guys. But cool. This works, okay? So let's say on average it moves around 50 pips, okay? What I usually do with GBP USD is I would say on average GBP USD will move 30 pips, okay? So in this case, I'm going to say anytime price moves 50 pips or more, okay? Let me have a look at a couple more ranges actually just before I... What I'm doing, guys, is I'm trying to see on average how much does price move, because what I don't want is I don't want to get into a trade and we are just consolidating. That's the worst thing, okay? No one wants to get into a trade and price is moving sideways. So the reason why I'm measuring up all of these ranges is to see exactly how much does the market usually move without actually moving. Okay, so what's the consolidative range? It's around 50 pips. So let's say we need to now see price move 60 pips or more, okay? 60 pips or more. 60 pips or more, okay? So now I'm going to measure from the close of this bullish candle, okay? The close of the bullish candle is going to be at the top. I'm going to measure 60 pips, okay? If price comes down 60 pips or more, then when it comes back up, I'm going to take a sell. If price moves up 60 pips or more, then when it comes down, I'm going to buy, okay? So in this case here, just to kind of draw it out for you guys, the example is this, right? The example is this. Price from the close of this candle here, if it comes down 60 pips, when it comes up, I'm going to sell it from the foot of the candle and 50% of the candle. I'm going to sell here, I'm going to sell here, okay? If price has gone up, then when it comes back down, I'm going to buy from the head of the candle and from 50% of the candle. So one from here, one from here, okay? Like I said, guys, this is going to give you a 70 to 80% success ratio, okay? So in this case here, we can see price clearly moves down more than 65 pips, right? It moves down 188. So when price comes back up, we're going to take two entries, okay? We're going to take one off of the foot, and we're going to take another off for 50% of the candle, okay? Now, to mark 50% of the candle, I usually use the Fibonacci tool, but thanks to an updated trading view, you no longer have to do that. You could actually just very simply click on the tool, the rectangle in this case, and they've got a middle line. So you can see now 50% of this straight away, which is even better, okay? So I'm going to take two short entries. My first short entry is going to be here. Let's move this SL down. I like my SLs being 35 pips with currency pairs, okay, if I'm honest with you. Obviously, I don't trade GU. We've just seen on average GU moves around 50 pips, so 35 pip SL's probably not even going to be too handy. But in this game, guys, we want to learn to be more precise than just lucky. You know, if I can't catch a trade within 35 pips, sorry, if my SL, if the price runs past my SL, then that's just teaching me to be more accurate. I want to be more precise. I want to teach you guys to be more precise. This is not about getting into a trade and risking, 50 pips to catch 50. No, we want to always make sure the reward is more favorable, right? So in this case, price pushes down, and we can very blatantly see that price pushes all the way up, right? It pushes all the way through this area, which puts us in a position where our first two trades are a loss. The first two trades on a session candle is a loss. Now, you guys might be thinking to yourself, what on earth is he talking about? This doesn't make any sense. But guys, sometimes you have to lose in order to be able to win. So in this case, what we do is we put ourselves in a prime position where we say, okay, cool. Price is pushed up with such a bullish candle, which is actually showing us that institutions have entered into this, because there's no reason why price would move like this unless you've had institutions buying. So we lose the first two trades. We're down 70 pips. Now, I promise you guys, this is where it gets fun, okay? Because with the same session candle, we are going to use that to understand that, hey, if price just pushed down 60 pips or more, and we looked to sell it when it came back up and we lost, well, price has very visibly moved up more than 60 pips or more. So hey, when price comes back down now, I'm gonna buy it. So just like what I said to you guys where we would be buying from, we're gonna buy from the head of the candle and 50%. Okay, I'm just gonna change this quickly because I don't like how it's the dotted line. I didn't even mean for that. And yeah, that's it. Perfect. Perfecto. Okay, so now we're going to enter two positions, right? One is going to be from the head of the candle, which is just the wick, the high. Okay, and the other is actually going to be on 50% of the candle. Okay, so 50% of the candle. Now we can see here in this instance, it comes really close. It would have been a sniper entry, but we missed it. Okay, maybe depending on what other exchange platforms are out there, or your prop firm or your broker that you're using, you may have been tapped into that trade. Okay, but what we see happening is here, price comes down, it gives us a sniper entry, and then it pushes right back up, and it gives us a 4 to 1, a 4.2 to 1 R&R. That's by risking 35 pips, guys. We catch 150. Now, I've got a saying that I've taught many of my students, which is, if price does not break your strategy, if price does not break your candle, excuse me, if it doesn't break your trading criteria, then always re-enter the trade. Okay, so we've gone from understanding that if price moves up 60 pips or more, we are going to get into, if price moves 60 pips or more, we are going to wait for the pullback. Wait for the pullback. Okay. The second thing we've learned is 35 pips is our SL. Now, guys, look, if you're trading off of a daily time, hourly time frame, excuse me, then 35 pips is enough. If you're trading off of a daily time frame, a weekly time frame or higher, then of course 35 pips is going to be insane. But what I'm trying to teach you guys here is how to be precise, not about how you guys can be lucky. Who wants to be lucky by being lucky? It was by teaching them the exact steps that I'm giving to you guys for free. We live in such a crazy generation now that 5 years ago, 6 years ago, 3 years ago, I would never tell you guys this. I wouldn't be on YouTube telling you guys what people was paying me thousands of pounds for. Now, however, the game has changed, and I understand that, if I'm honest with you, the more information that's out there publicly available for people that can help them, the better it's going to be for people like myself to also get recognition. Because at the end of the day, if people are going to go on YouTube, they're going to learn themselves, then at least give them a fighting chance to learn the right stuff. Because when I was going on YouTube 8 years ago to learn trading, this shit weren't up there. This weren't up there. So again, you can go and you can watch ICT videos. They're great videos to watch. I studied ICT back to front several years ago when I got into the game. And I tell you what I've learned and compacted into now my teachings is pretty much through trial and error. Because you can learn 10 different languages, but you'll find that you only may be comfortable talking 2 of them. And it's the same with trading. You can have 10 different strategies, but you need to go through trialing those strategies to figure out which ones is more profitable for you, which ones are more desirable and easier for you to use on a daily basis. This strategy here, I taught my cousin who was 14 years old. If you do not understand this strategy, you are a retard. My cousin was 14 years of age. If you do not understand this strategy, guys, you are a retard. Okay? So, we're waiting for price to come back down. Now, again, okay, what I wanted to write in here is, if price stops us out and doesn't break our structure, re-enter. We will re-enter. Okay. Let's make this a bit more smaller. Okay, cool. There we are. Perfect. If price stops us out and doesn't break our structure, we will re-enter. What do I mean by that, Vel? Well, we can see this is the candle that we're playing from. Okay, we've got two areas that we're buying from. Area A, entry area A, entry area B. These are the two areas that we're buying from, right? So really and truly, this whole purple zone is a session candle, right? It's the London session candle. If price closes beneath this zone, guys, if it closes beneath this zone, do not re-enter the trade, okay? If price comes down and wicks this area and pushes back up and closes inside of the session candle, then it's more favorable for you to want to get back into the trade. You of course do have to, you know, have a look at price action, but look at this, for example. Yeah, price shot straight up through this, which would tell us straight away it's closed above this candle here. The sell is no longer on. Okay, so in this case, price pushed up, it gave us 150 pips. Guys, by the time you've got 150 pips on the cards, you should have taken 90 to 95% off of this trade. Your stop loss should be running in risk-free profit, right? So you should be getting stopped out in profit. So when it comes back down over here now, this is the time where when it comes back down into here, you should be putting yourself in a better position to now re-enter again. Now, it doesn't quite come down to the 50%. Okay, we don't quite reach the 50%, which is quite a shame because that is only based off of our stop loss criteria. Okay, if our stop loss criteria was 50 pips, 40 pips, then our first trade area would keep us in these trades. Okay, but I don't think it just about would keep us in. Okay, let me just move this across and have a look. It just about keeps us into this trade here. Okay, look, yeah. It just about keeps us into this one. Maybe it comes down around 45 pips. But by the time it comes down here, we definitely got stopped out, guys. Okay? So in this instance, price has come down over here. Then it's pushed up. It's given us around 64, 65 pips. So that's just under a 2-to-1. Meaning your first take profit should have been hit, which means you should be risk-free again. Okay, you should be risk-free, which allows you to put yourself in a position where if you get tapped out, you get tapped out. Okay, now, with that being said, price has come down. Now that price has come down, what's happened? We're seeing heavy candles closing inside of the zone. Some of you might hesitate, but ultimately price pushes up. So even if you hesitate in this area and you don't take the trade, okay, price pushes up, it goes away. People start to panic, people start buying, but we, being patient, having a criteria, say no. We want to wait for a re-entry, we want to wait for a retest, for a rebound. When price comes back down, we get into this trade here, and look at this result. Now, I told you guys within 6 trades, we're going to find a profitable, within 6 session candles, we're going to find a profitable trade. Well, it only took us 3, okay, it took us 3. It took us 1 session candle, okay, but 3 trades. The first 2 trades was a L. Second trade we made 150, and if you think about it, we lost 70 here, so we netted 80 pips here. Price came up, we got 60 pips here, and then price has pushed all the way up from here. And what's that? 323 pips. That's a 9-to-1 R&R. I promise you this, no one is giving you simple strategies like this. People will watch different videos online and they will tell you, they will just recreate the video. They'll recreate the video. This is the LWV strategy that I've taught to my students, and it was one of the first things I taught them, and I personally believe it's the easiest strategy to become a trader. You don't need to glamorize it by, you know, understanding market structure. I mean, you do. It helps to know these things, guys. I, of course, am an advocate for market structure, for institutional candles, for everything. But by just understanding this, by drawing a purple box, by drawing a 50% line, which now you don't even need to. Back in the day, you had to use the Fibonacci. This is what you had to do, guys. You had to mark the high to the low with the Fibonacci, and then you had to get a horizontal ray, okay, and highlight 50%. Make sure you're accurately targeting 50%. Delete the Fibonacci, and then put your buy position on top of it. Now you don't have to do that, guys. Now you can just simply click on the box, the rectangle box, and it's already got a middle line. It's already got that there for you. So your job's made 10 times easier. So all you need is to use a pip stick, this is what I like to call it, to measure the amount of pips price has moved up or down. Once you've done that, you then simply want to measure out your box, highlight the high, and the low and 50%, because of course if it comes down more than whatever the amount of pips your criteria is, in this case 60, if it comes down 60, then when it comes back up, we're selling from here and we're selling from up here. Yeah, but if it goes up more than 60, then when it comes down, we're buying from here and we're also buying from here. Okay, we're buying from the 50 and we're buying from the head of the candle. So look, man, we didn't even need to draw out 6 session candles. Okay, the first session candle I've drawn, look what it's done. Look what it's done. Look what it's done on a live stream. Someone said in the chat box, Cavell, look at GBP JPY. I told you I fucking hate GBP JPY. But look what it's done. If you got into this entry from down here, guys, let me just rewind, because, yeah, this is looking crazy now. So from just this one entry that we had right here, guys, right here. This is what they say sometimes when they say one trade, you're one trade away from changing your life. Whoa, guys, it's this entry here. Let me circle it so you can see it. It's this entry right here. That entry right there would have changed your life. What is the purple zone? The purple zone is a session candle. If you're new to the stream, if you've just logged in, smash the like button, please. That would actually help me. It may not help you, but I'm sure it does something to the algorithms in the matrix, and somehow, in a big, glorious way, it's going to help you guys, help other people. So smash the like button if you haven't smashed it already. And money day to all of my money day earners in here. Yeah? Money day, lit team, you know the vibes, it's lit side. Now, this entry here, guys, is what would have changed your life. This entry here, put me up against any one of your traders, any one of your Instagram influencer, guru traders, and bring their strategy to me, and I'll put this strategy up against it. And I'm telling you, this strategy is up there. This strategy is top 2 of all time. Why do I say that? Because I taught my 14-year-old cousin this strategy, bro. Why do I say that? Because I was able to be in Mexico having fun and earn £18,000 trading US 30 from the strategy. This strategy doesn't require me to make sure if the structure is bullish or bearish. This strategy doesn't require me to make sure if different factors have been checked first. This strategy just allows me to shoot. Now, of course, guys, disclaimer, the more strategies I have on top, the more confluences I have on top is going to help me be more profitable. So I'm not suggesting that you just use this by itself if you guys are familiar with different forms of confluences. You know, for example, you know, we can clearly see here the structure was bearish, right? Price pushed up, it broke the bearish structure, it pulled back. We knew this was bullish because it broke the bearish structure. Okay, when price came down into this zone here, we don't need to, but what I'm saying to you is this: we don't need to understand the structure in order for us to know that we're buying from here. Why don't we need to know the structure? Because the strategy tells us if price moves down 60 pips or more, then when we pull back, we're going to sell. Okay, if price moves down 60 pips from the close of the bullish candle, it's either if the candle is bullish, the close is at the top. If the candle is bearish, the close is at the bottom, right? So we measure 60 pips. Okay, I don't even know why I drew that red line. We measure 60 pips from the close of the candle for those who've just tuned in. 60 pips, okay? Cool. That's 190 pips, yeah? So straight away we're saying, cool, when price comes up, we're going to sell, bro. It's as simple as that. We're going to sell. Now, when we sell from here, we're wrong, yeah? We sell from here, we're wrong. We get slapped in the neck like Amanda in Saw 3 twice. We lose 70 pips. That could be £70 if you're trading a pound a pip. We're down bad, yeah? Well, not really, but we're down, okay? Price slaps through the SLs and it starts screaming up, Rocket Man, baby. Baby, I'm a rocket man, right? And then it comes back down. But when it comes down now, what does it do? It comes down into our same area. And this is what you got to ask yourself. Why has price come down into this session candle? Why has it not gone somewhere else? Why has it come just here? Why has it come here? And it's because I told you everything is fractal, okay? The market will always go to where it's been before. And if it's been somewhere new for the first time, then it will create market structure. Now, most traders, maybe some of you guys who are unfamiliar with the strategy, will probably be looking at this like this. This is how you will see the chart. You will probably think, yep, imbalance. This is what a lot of traders on YouTube are saying now. A lot of dweebs who just come into the game, trading 2 years, and all of a sudden they're gurus here in Dubai. They're telling you, yeah, fair value gap, fair value gap, fair value gap, fair value gap. if you're trading off of a fair value gap, my guy, then that means this whole space in here is a fair value gap. We call it imbalance for all the OGs, yeah? This whole gap here is an imbalance. So if you're taking a trade just based off of an imbalance gap, okay, which is going to be stupid, but let's just say you are trading off of an imbalance gap, then that means, right, that if you was to buy from up here where the imbalance started from, your stop loss, okay, your stop loss has to cover the whole imbalance because you don't know where price is going to go. Do you get it? You don't know where price is going to go. So this is the reason why the fair value gap doesn't work just by itself, guys. You have to have a bit of a idea inside of the fair value gap. Okay, I'm going to take trades from 50% of the fair value gap, for example. You've got to have ideas to narrow down your stop loss. Or you could just be a gambler, bro. You could just go to the fucking casino, put money on red or black and hope for the best. I'm not trying to trade and do that. I don't want to be putting on trades where I'm putting myself in a position where I'm not too sure. And if it doesn't work in my favor, then I lose what I stand to gain. Fuck that, okay? Isn't the purple box his SL? Just to make it clear again, guys, okay? Number one, I don't trade GBP JPY, okay? I just came on this pair because someone asked me to analyze this pair, okay? Number two, the purple box is my session candle, okay? What do you think I mean by session candle? Can you see here? I've got the session. These purple boxes are the London session candles. 8 a.m., 8 a.m., 8 a.m., 8 a.m., 8 a.m. candles, okay? Now, this strategy, what I do is I highlight the opening session, hence why I call it a session candle, okay? I highlight the opening session for the specific pairs I'm trading. So if I'm trading GBP against JPY, I should be highlighting the London Open and the Tokyo Open, okay? Now, me personally, I only like to highlight one, okay? And the reason why I like to highlight one, because I highlight, in this case, the session that's more favorable when GBP JPY is actually moving. Okay, I find GJ, I mean, I don't trade GJ, but I know of GJ, of course. It probably moves more throughout the London session than throughout the Tokyo session, okay? So I'm highlighting the London session open, okay? So what we're understanding here, guys, is if we understand how much pips GBP JPY moves on average. For those of you who are tuning in, it's really important to understand. Does that make sense now? Yeah, bro. It's really important to understand whenever you're trading a pair, find out the range it's moving. Every pair goes differently. Gold moves 100 pips on average, right? Bitcoin moves 400 pips on average. Find the range. Once you find the range, okay, then you can say to yourself, okay, cool. I don't want to get into a trade and price starts moving in the range. I want to get into the trade when the price is doing this, when the price is moving up like this, when the price is moving like that. That is when I want to get into the trade. This is what I'm looking for, aggressive price action. So to understand what we're looking for is to make sure that we refine our strategy to better suit our criteria. Meaning, if GJ moves 50 pips on average, cool. I want to wait for price to move 60 pips, 10 pips more than the average. Because if price moves more than 10 pips, if price moves 10 pips more than the average, then that to me signifies that it's actually moving in a direction. Therefore, when it pulls back, I'm going to be more inclined to jump on that train. So because of that, what I'm showing you guys here is that, look, I told you guys at the start of this session, give me 6 session candles and we'll find some profitable trades within 6 of them. Well, within the first session candle, guys, we found the first 2 trades we lost. Granted, we lost 70 pips. But then after price came here and we got 150 pips here. Okay, so, you know, we've got a nice 4-to-1 R&R here. Let me just keep this separate. Okay, yeah. All right, cool. Let's move this one like this. Okay, cool. All right, cool. So what you guys can see here now, you can see it a bit more clearer. The first one we had 150 pips, right? So we got a nice 4.3 to 1. Okay, so 4 to 1 R&R. Okay, and then the second time price came down, it stopped us out. Okay, stopped us out. Sorry, it didn't stop us out. This time when it came here, we stayed in the trade, but we didn't get the maximum, glorious 150 pip move. This time we got around 65 pips, guys. We got 67 pips. Now, that just means that it's most likely probable that our first take profit target would have been hit. If I'm risking 35 pips as an SL, and that's 1%, then when I'm up 35 pips, I'm up 1%. So if we was up 65 pips here, that means we're almost up 67 pips, sorry. We're almost up 2%. So you can bet your bottom dollar, mate, I'm going risk-free, and I'm taking some off the table. So by the time prices come back down now, okay, by the time prices come back down, we've just been hit out, okay? We've been stopped out in profit, okay? Then we've seen price come down, push down here a bit more aggressive. It hasn't reached the 50%, so our trade hasn't been triggered in. If we did take a trade in here, then we would have got stopped out. But eventually, by being persistent, by being patient, okay, price pushed up. Price pushed up again. It came back into the zone. Now I told you guys this: if price stops us out and doesn't break our structure, we will always re-enter. Okay, we haven't seen price close beneath this purple zone, this session candle. We haven't seen price close beneath it. So price comes back down here, and this was the last time price came back down here. This was what, April the 25th. Sorry, Friday the 11th of April. Okay, this one entry here would have changed your life. Because from this one entry, guys, look what price has done. From this one entry, still going higher. Look at that. From this one entry, guys, where's price at? Wow. Goodness gracious me. From this one entry, you would have been able to smash over 1,000. What was that? 1,181 pips. Guys, what I'm teaching you here, you can't buy. This is the reason why people will pay me thousands of pounds for my mentoring, okay? This is the 33-to-1. No, look, granted, we don't know how much pips we're going to gain. We don't know how much pips we're going to gain, right? But we understand a structure being bearish to a structure being bullish. Now, the structure changed from bearish to bullish. So when price pulled back and we got into these buys, well, we could have targeted these highs immediately. Yep, cool. Once we targeted those highs, these highs here would have still given you 340 pips. So that still would have been a 9-to-1 R&R, right? But eventually, guys, you will be put in a position sometimes where the older, the more mature you get in trading, and the more you understand about fundamentals, you probably start to hold trades a lot longer. I think when you're younger and you're fresher in the game, it's kind of like, let me get in and get out, get in and get out. But sometimes you start to realize, actually, I'm in some good positions here that, cool, I'll still scale out along the way, but I probably could hold this for a considerable amount of time and see where it's going. So, guys, I just showed you how you could have made over 1,000 pips on one trade. Last year I gave out 1,600 pips on AUD JPY, and we had to hold that trade for a couple of weeks. So that is what happens. Sometimes you have to hold trades, guys, because it's just more profitable to do so. Okay, this is a bearish candle. We can look at the same thing. This time the close of a bearish candle is at the bottom. So we're going to measure from the bottom right here, and we're going to go up. We want to see 60 pips or more. Okay, now we can see here, this here is 60, that's 70 pips. Okay, so this is another thing, and this is a good example for me to show you guys. This is a great example for me to show you guys. Sometimes when price moves up, okay, sometimes when price moves up, right, it hasn't really surpassed the candle we're playing out of. What do I mean by that? Well, I mean, now look, if this was to simply push up here and then come back down, I wouldn't be taking a buy off of this area. Let me change this so you can see that into red. Okay, let me make it thick for you guys. Because price has pushed up and come back down, I wouldn't be buying out of this candle because it really barely just surpassed this bearish candle. I would need price to push up a bit higher first and then come back down, because I need to see price has had a sufficient pullback. I wouldn't believe that this is an efficient pullback, okay? If price moved into the 50%, of course I would, okay? But I wouldn't be taking the entry, because remember I told you guys we're going to take two entries, right? We're going to take one off of the head of the candle, which is even up here, And it's debatable. You can take the entry here, or you can take the entry off the close of the candle, or the open of the candle, excuse me. It's entirely up to yourself. But me personally, whether I was to take it off the top or here, I still wouldn't have been able to take either one because, you know, price didn't even close above that, right? But what we can do here is we can see we get an entry here at 50%. Okay, so you can see really we're looking at this candle here. Yeah, because price is pushed up, it's closed above, then it's come back down and it's tapped us in. Now when it's tapped us in, it's pushed up and it's given us what? 150 pips. Again, 4-to-1 solid R&R. Okay, and then eventually price comes back down again over here. We get tapped out. We lose. Okay, and even over here, up here, we lose again because this black candle comes down. Okay, there's nothing wrong with losing, guys. Sometimes you have to lose to win, because guess what? By losing 1, 2, okay, that's 70 pips. Okay, by losing 70 pips, look at what we gain. This is 217, 214, right? And then what happens? Price comes back again to your area. Now, I told you guys this already. If price stops us out and doesn't break our structure, we will re-enter. So we see the same thing happening again over here. Okay, price has come back to the session candle. We get a sniper entry. We don't even need to risk 35 pips, but hey, we still risk 35. And what did we get before price comes down? We get 187 pips. Okay, price comes down to the same level again. It's already come here how many times now? This is the third time. 1, 2, 3 to the 4. Stoop Doggy Dog and Warren G at your door. Okay, this is exactly where we want price to be, coming back to our entry, not closing beneath it, right? And when it does that this time, by you guys staying true to yourself, look what you catch, bro. 423, and it probably keeps on going. Yep, it does. So you're probably going to catch the same as what we caught over here, which was 1100 pips. Okay, this one might be just a bit under. Yeah, so this one here we catch 1,000. So we've been able to catch over 2,000 pips, and of course we're going to be buying more along the way. That is just a brief introduction of how the session candle strategy works. Okay, for more information, there's a full video breakdown on my YouTube channel. If you haven't already, please subscribe. It does help me pass the vibe. I gave out $1,000 yesterday for reaching 1,000 subscribers. We're already on 1,100. Are we on 1,100 subscribers already? I think we are. I need to double check that. But I gave out $1,000 yesterday in my community. So if you're not inside my Discord community, then you do need to send me a message. Send me a message. Ask me for access. There's going to be a link in the bio somewhere, and the link in the bio is going to give you guys access to my Telegram, and from the Telegram you guys can message my support team and they'll help you guys get inside of the Discord. Okay, I'm gonna just read the comment section to see what's going on inside of here. Alaikum salam. Thoughts on US oil, Bitcoin? Well, US oil, that's an interesting one. Let me read all these comments first. Gold, Bitcoin had some bull power again, yet I doubt it will last. Wondering what it would do with the New York Stock Exchange open. Wow, open already just came. We already had the open. Let's have a look. Let's have a look. Just saw the time and I thought, damn, price actually looks a bit empty, if I'm honest with you. But this is a bit like Art Attack. For those of you who remember Art Attack, you can see here, look, okay, these are my session candles, guys. These are my session candles for Bitcoin. Okay, it might look ugly to you guys, and it might look crazy to some of you, but guess what? These get me paid. These get me paid, guys. These get me paid. Look at entries like this. It's incredible. Yeah, incredible. 61, 69 to 1 R&R. Incredible. Okay, you know, we're catching buys. Incredible. And now, really and truly, I'd look at a sell. Okay, I'd look at a sell. I look at a sell because we are on a significant level of structure right now. Price has slowed down, and look, something that a lot of people tend to kind of ignore is the fact that with Bitcoin, it is still seen as a risky asset. Okay, it's not seen as a commodity. I know we think it's a commodity, but it isn't seen as a commodity. It's not respected as a commodity. Investors will take their money out of Bitcoin when there is uncertainty. They will take their money out of Bitcoin and put it into more safer assets like gold, you know, or even like the dollar. Okay, and as much as, you know, we can argue the dollar is not a safe haven, but investors see it like that. Okay, they don't see they don't see themselves losing value of their money by holding it in the US reserves, holding it in US dollars, excuse me. So Bitcoin could still come down. Bitcoin needs to come down. I mean, I called 97K over the weekend inside the Discord, and, you know, we came really close. We came to 98. I thought we was really going to hit it. We didn't. We had a good spring. Price could push up right now, but it is inside of a range. And, you know, this range that's inside of, I'm not really expecting it to do much. I think investors are kind of leaving Bitcoin alone for the moment. We probably can still see higher prices, but ultimately I'd only be looking to short this. I wouldn't be looking to buy Bitcoin at 105k. You must be mad. So yeah, you can see here, even if we got into a short here on Bitcoin, using these levels, okay, the dotted lines in between these purple zones, they're the 50% areas. Okay, so you can see again, guys, just more accuracy here. Let's take this off. That's annoying. Cool. So if you get into a sell from here, it says nice sniper entry, 50 points. 50% of the session candle comes down. Bada bing, bada boom. What does it give us? 1,423 pips. Bada bing, bada boom. What more do you want from me? What more do you want from me? I'm giving this to you guys for free. The purple zone is a point of interest. The purple zone are my session candles. Yeah, they're all my session candles. I just showed you guys on that shitty GBP JPY that I don't trade. I just showed you guys licking out thousands of pips. Now I'm showing you guys this on Bitcoin. I can go on gold and show you guys the same thing. But for more information on that, just simply go and watch the video, guys. Okay. I do want to kind of show you guys some current live data so you guys can see what's happening. Gold, this is the short we gave out, or short I gave out on gold. The short I gave out on gold here today, 3295. Oh yeah. 3295. Does it come down to it? What do you know, guys? What do you know, ladies and gentlemen? We hit 3295. Did we hit 3295? We hit 3295.6. So no, we still need to hit 3295. Let's just put the alert there. Okay. So gold is coming down right now. Okay, it is coming down. Quite surprising. Gold's coming down because Iran has said that there's a ceasefire. Sorry, Iran and Israel said that they ceased fire, but I don't really know if that's true. I'm just seeing a report coming through now, and the report is actually saying that Israel broke the ceasefire agreement with Iran. Let's just have a look at this quickly. Apparently Israel broke the ceasefire agreement with Iran. I'm not sure how true that is, but we're going to have a look at it together and see exactly what we make of this. But of course, you know, gold is naturally pulling back. That's the real purpose of what I'm actually trying to share with you guys here. Gold is just pulling back. It's not something to look at and say, wow, what's happening? Gold is melting. No, guys, you know, I got into gold when it was around 11.50 an ounce. 11.50 an ounce. Now gold is as high as $3,400. To me, that's insane. So, you know, gold is just doing what it needs to do. It needs to pull back. It's really been inside of this whole range since really April. So there's no harm in gold pulling back. I've got all the confidence gold will be pushing up again. I'm really looking at silver. You know, silver is the most underappreciated commodity asset, which I think has a high of $40 or $45. What is it, 50? It has an all-time high of just under $50, right? Silver, imagine buying gold when it was $35 an ounce, and now it's at $3,000. Could you imagine buying gold at $35 an ounce? Do not sleep on silver, guys. Silver, you guys should all be buying physical silver. Okay, not just trading it, but buying physical silver is a huge investment. because there's a lot of upside potential. Okay, a lot of you may not be able to afford $3,300 to buy ounces of gold, but I'm sure you can afford $35. Okay, so we might be getting a big pullback taking place right now with gold. If that is the case, then so be it. That isn't a problem. Let's have a look at this video here on Twitter.
Iran violated the peace agreement and the ceasefire agreement. Do you believe that Iran is still committed to peace?
Yeah, I do. They violated it, but Israel violated it too.
Are you questioning if Israel is committed?
Israel, as soon as we made the deal, they came out and they dropped a load of bombs, the likes of which I've never seen before. The biggest load that we've seen. I'm not happy with Israel. You know, when I say, okay, now you have 12 hours, you don't go out in the first hour and just drop everything you have on.
Don't know if you can hear this.
With them. I'm not happy with Iran either. But I'm really unhappy if Israel's going out this morning because the one rocket that didn't land, that was shot, perhaps by mistake, that didn't land. I'm not happy about that.
So first things first, yeah. Fuck my man, innit? Trump. I don't know who made him the governor. Yeah, he's talking like he's just running everything. Like Israel, he's talking like he's in between everyone, and he's the guy he's in control. Fuck Donald Trump. Yeah, forget about him. He's a joker. These people, they're all sitting down, and they're all behind closed doors, and they're all making a show of it. Because if you really think about things, guys, let's really think about things. Yeah. All these bombs have been sent off and been landed in this country and that country, but you ain't heard of no deaths. How can all these bombs be in the sky and be caught on camera, but no one ain't died? Not to say that I want people to die, but what I'm saying is they've all sat down, they've all had conversations between each other, and they've all said, look, we're going to strike here, you should strike there. Because at the end of the day, it's all a part of their regime change. You know, America can say they don't want Israel to take over Iran, but you know, Iran also isn't owned by the Rothschild central banking system, whereas a lot of these other countries are. So there's a lot of reasons for them to want to take over Iran. But the reality is, guys, Iran sent missiles to Qatar, to Qatar, round the corner from here, right? But they called up Qatar to tell them we're going to send missiles there. So what's the point of sending missiles? If you told them, yo, we're going to send missiles to you, bro, to your US airbase, just letting you know, then what's the point? Then it just sounds like really it's a theater. It's a movie show. It's not actually a war going on. It's actually a theater show, guys. So look, when I say buy silver, I say this because silver is a good long-term investment. There is a website called coininvest.com, coininvest.co.uk. Let's try coininvest.co.uk. No, okay. Coininvest.com. This is the site that I told my students to buy from. I've also purchased from here before in the past. And yeah. This what? Coininvest.com. What is Coininvest.com? What's going on? There we are. Okay, it's called Stone X Bullion now, guys. I buy all my silver and gold off of this website. It comes to me by UPS. Okay, it gets delivered. Depending on where you are, you most likely do have to pay importation tax. But, you know, these coins are really cool. You know, get ounce of silver coin. This is in euros and stuff, whatever. But I definitely would recommend you guys investing into some hardcore assets. I mean, a lot of you are making profits in my channels, right? A lot of you are making profits in my Discord. What are you spending the money on? That's the question. Let's see here. Who's made what today? Andrew. Big up Andrew. Andrew's made £430 today copying my trades. Large up yourself, Andrew. Lev's made £16. Now, £16 may not sound like a lot of money, but guess what? £16, right? What can that do for you on this website here? £16. I'm sure that can go towards some silver coins. Let's go to, let's change it to pounds. Let's see. Okay. £16. I mean, look, £16 is half of an ounce. You can get, you're halfway there. You know, you're halfway there. £17.59. There you go. That is what the profits could get you. I know this might seem foolish to you at the time. You might be thinking to yourself, it's only £16. Why am I going to withdraw that? Well, £16 can actually put you into a position where you own an investment. Okay, guys? Lev, of course, has made a lot more than 16 quid. That was just one trade. Here, we've got Mr. Hunterlini. He's made over £614, mashallah, habibi. £614 on gold. Now, if you think about it, what can £614 get you here? That can get you over a kilo of silver. That can get you over a kilo of silver. Now we're talking about keys. We're talking about big bricks. We're talking about buying bricks of silver here, guys. These are the things we need to be doing that put us in a position where we've got tangible assets that can help us in the future, because that's what this game is about. If you're trading for the future. You shouldn't be trading just for now, trading to pay your rent. You should be trading for the future. You should be trading to set yourself up so that you can have an early retirement. That should be the whole point of us trading, guys. When our parents was young and they was working 20, 30 years, they had to work 20, 30 years, and they paid a salary. They got paid a salary, and half of their money they put into the equity into the company, and the company matched it by putting money into the equity as well, and they got 50-50, right? So if you worked at Woolworths, you put £100 of your money into the shares of the company would match that and give you £100 too. 20 years later now, when they're retiring, your parents have got 60,000 shares with Woolworths or 60,000 shares with Rolls-Royce. And now, when they go and check the share price of Rolls-Royce, it's at £12.50. Back in the day, it used to be 95 cents. That's their retirement fund. That is their retirement fund, guys. We don't have the luxury of having these type of things because no one ain't holding down no job for 20 years. Who the fuck wants to do that? Who wants to hold down a job for 20 years, bro? I feel sorry for you if you do. So, when we're on the charts now, we need to look at investing into tangible assets like silver, like gold, for example, because what that can do is it can help us. Let me close this WhatsApp on the computer, guys. What that can do is that can help us have investments for the future. Okay? So, look, we've come really, really close to TP3, for gold. Let's see what else we got in here. Money Day, guys, watch this education very slowly. He's been teaching this for years, and I used to pay for this information back in the day. It's true, Mo. I appreciate you, my bro. Money Day. Let's see. What pair do you trade mostly, bro? I mainly trade gold and Bitcoin. That's what I kind of trade these days, gold and Bitcoin. Hi, Vel, I can't access the live trades chat. Do you want me to be great? I want you to be great, but being great comes at a fee now, sis. Session candle start strategy is clean. It's very clean, my bro. It's under a paywall, 200 a month, but you will make it back ASAP. Take the free trades until you can afford it, if it's a lot for you. There ain't no more free trades, guys. I'm not giving out no more free trades. I'm not doing that. Do you know why I'm not doing that? Because I ain't got the time. I live in Dubai. Do you think I want to be sitting behind my computer on the screens giving you guys trades all the time? Like, I'm not a trader that has to live my life by doing this. I actually trade. I don't need to give out trades for you guys to pay me. I don't need to do that. So I've been giving out free trades for as long as I can remember, and it kind of just dawned on me like it's kind of getting a bit long. So I've got over 500 plus people in the server, right? There's only maybe about 30 to 50 of you that take the trades, if not less. So, you've got to go where you're valued, and unfortunately, guys, I don't really feel too valued. So that's why I've stopped the free trades for now. This was a wrap up of the trades that was taken from the 17th. There was only one losing trade in there. So, come on, guys. Since I made this a paid session, just for transparency, you guys can see we still ain't lost. We're still flying high. We're still flying high. Yeah. So, look, man. Any more questions before I go? I was in a VJ shop. I can't answer. Random question, because there's a forecast of oil prices rising. Will this push Tesla up as well? Tesla got nothing to do with oil. What do you mean Tesla? Tesla is in its own world right now. Tesla is the largest AI company in the world. So, effectively speaking, the Tesla is the company Tesla. Over the long run, I think they should go over $2,000 a share. If I'm honest with you, well over $2,000 a share. And what makes you say over $2,000 a share? Well, I look at it like this. Right now, Tesla have got so much pieces to their business that they haven't yet brought into fruition for public purchase. Once they do, right now Tesla's share price is mainly based off of their cars. Tesla also provide AI. Okay, they provide AI, they provide the motherboards that go into vehicles, but they're also building robots, they're also building self-driving cars. You know, once these things are in full flow and the public are able to purchase them, I don't see why Tesla won't be higher than Facebook, why Tesla shouldn't be one of the most expensive companies on the stock market. Tesla is an electric vehicle company, which, you know, we're not yet in a fully electronic environment, are we? We're still using petrol, we're still using diesel. So Tesla isn't yet that company that is a necessity. Everyone doesn't need a Tesla right now, right? But you got to think, in years to come, when you're not allowed to drive petrol or diesel cars, Teslas will be essential. Electric cars will be the next thing, and that is the reason why Tesla will be a very good long-term investment. Now, I told you guys to buy Tesla in the Discord at $250 months ago. Okay, last year in October, I told you guys to first buy. We pushed up and we cashed out a lot at around $490. Price came back down. It dropped even lower when the whole Trump stuff happened, and you know, now price has been pushing up. We're in a position. This happened when the markets was crashing. Excuse me. So, you know, we've seen the markets crashing and the whole technology sector taking a hit. And we've seen the whole madness with Trump falling out of Elon and price coming back down. But ultimately, guys, Tesla is still a very bullish asset to buy. Okay. Have you announced the winner for the 1K? Yes, I announced the winner for the 1K. Is inside the Discord yesterday. The winner for the $1,000 was Light DC, a subscriber called Light DC. He is the winner for $1,000. Congratulations. This was mentioned yesterday, like I said. If you guys are not inside the Discord, you guys need to get access. The Telegram trades, bro, they'll be, you know, they're here and there. It's not my main focus. I'm actually helping out a friend sending out the trades in there, so it's not actually my main flow. It's not my hustle at all. I'm just literally working with a friend and helping him by sending out trades. So, you know, you'll see them when you see them, my bro. That's what it is, you know. That's what it is. Everyone wants something for nothing. That's the problem in today's society. But when we have something for nothing, we tend to not pay attention, right? Rabs, I sent out over 33 winning trades in the past 20 days. How many of those trades have you taken? How many? You probably haven't taken much, right? And the reason for this is simply the fact that because it was free. If I paid for my Netflix, right, you damn right I'm going to make sure I tune into Netflix. Otherwise, why am I paying for it? You know what I mean? To be fair, I end up still paying for Netflix and not watching it. But you get what I'm trying to say, guys. When we pay for things, we just pay a bit more attention. And that also actually would help you, because at the end of the day, if you're paying for a service that's requiring you to pay attention to it, well, the result is that you're going to be making more money in the process. Because out of the 33 winning trades that's been sent and the month's not even over yet, that would have surely helped you guys be in a position like Andrew here, who's been able to make £430 in just today alone. So, yeah, guys, girls, it's been emotional. Yes, Carl, that's right. Eric, that's right. It's been emotional. Any questions before I go? I don't think I have any questions. If I do, let me know. But I really appreciate you guys for tuning in. And if you haven't already, subscribe. Smash the like button. It does go a long way. It helps me help others. That's what this is about, guys. If you guys appreciate the game I've given you today, then please do just smash the like button and help me help others, put them in a better position where they can actually get some credible information to help them learn how to trade. The strategy I've given to you guys, like you've seen in the comment section, members have told you that they've once had to pay a lot of money for this, which you guys have had for free. So if you find the time, please, guys, smash the like button, subscribe. Thank you for your time. And always remember that every day is money day. Peace. Yeah.